Cool. All right, so we might get started now. Before we jump into today's session, I'd just like to thank everyone for taking the time out of their day to join us on Hyper's founder community platform, Apollo. This platform is built for you guys, whether you're a founder or a potential founder, or even just keen to learn more about the startup community. My name is Will, and I'm one of the startup advisors here at Hyper. And I'm very excited to be joined by my old co-worker and good friend, Sachin from Folklore Ventures. Just a bit
Hi,
about
everyone.
Hyper. So we're a global startup studio, and we help founders by creating the safest way to launch their startup. In today's session, we're going to be talking about how to get early stage funding, as well as pick Sachin's brain on what Folklore Ventures looks for when investing in an idea. What makes a good pitch, and what traits make a founder investable? Just before I hand it over to Sachin, as I mentioned before, if you have any questions, please put them in the chat box so that we can get into them at the end of the session. And we will be recording this session and adding it to our video library so that you can rewatch it at any time. All right, so I'll pass it over to you, Sachin, if you'd like to give us a quick introduction, tell us a bit about yourself, who Folklore Ventures are, and your role there.
Yeah, absolutely. Thanks very much, Will. And hey, everyone. Really happy to be here. Hopefully, it's going to be a good session. In terms of Folklore Ventures, we are an early stage VC. We're based in Sydney, but we can invest across ANZ and a handful of global investments as well. We like to invest pre-seed to Series A. So we are early stage. There's really no such thing as too early for us. Like, we can really look at a business that's just a pitch deck and an idea and still run with it. Deliberately sector agnostic, so we can invest across a lot of different sectors, but we do have specific kind of focus areas or preferences for where we like to invest, and they are essentially B2B SaaS or anything with software at the core. Healthcare is something that we've really doubled down on. Data networks and AI, which I think is pretty topical given the current state of the market, and robotics and automation. So that's more of like, I guess, a deep tech hardware component there. In terms of check sizes, really does sort of span the spectrum. Can be anything from a micro check of around 200K up to about 2.5 mil for that first check. But I think the important thing to call out with us is we reserve the majority of our capital, so around 70%, to follow-on equity. So that 70% of our fund is completely locked away for our portfolio. And the thesis there is to really double down on the winners where it makes sense and to keep investing in subsequent rounds. What that sort of means is we have a very deliberately concentrated portfolio. So we're not looking to make a heap of investments per year, more like a handful, but it means that we're quite high conviction when we make the bet. So each investment process is pretty rigorous on our end. We like to do a lot of DD and really build a relationship with the founder prior to making the investment, because the way that we sort of see this is it's a 10-year commitment for us. So it's important to do the work early. In terms of me, so I'm Sachin, I sit in the investments team. What I sort of cover at Folklore is basically the end-to-end of making investment. So that could be from sourcing, origination, doing the DD, executing, closing the investment, and then also portfolio management or portfolio support. So we sort of, we kind of just wear a lot of hats here, which is exciting. And in terms of, I guess, my background, I started my career in investment banking. So I worked at Macquarie in the industrials team. So we did a lot of transactions around consumer retail, healthcare, food and bev. I think that was a great way for me to kind of pick up on the more core financial technical skills. I then moved into Tio Capital, which is the family office of David Tio. I would say that was more growth capital or late stage private equity. And then I joined Folklore as an early stage investor. So progressively moving up the maturity of businesses.
Awesome. And just quickly, what do you like about being in VC? And then if you could just give us a little sort of scope on the current investment landscape and how many companies Folklore has invested in this year.
Yeah, absolutely. I'd say, I think what's really interesting about VC for me personally, kind of taking a step back, it's more about investing. So I've always loved the discipline of investing, like buying into something today, working with it, helping it grow, and then selling your position or like liquidating, I guess, at a future time, and hopefully realizing outsized returns. Like that's always, I guess, the ideal state. In particular, I found venture to be quite an interesting asset class, mainly for two reasons. So, firstly, I think with venture, you get to work with a lot of different interesting companies, like often working with bleeding edge technology. The founders that we get to meet are so interesting. They're working with they're trying to solve valuable problems. They've got a unique insight into the market, and it just makes for very productive conversations. And then the kind of technology that you get to see, you get to work across a lot of different sectors. You get to do a lot of context switching, and you're just constantly learning, which is something that I love. And then from the asset class perspective, which is a little bit more, I guess, academic potentially, I think with venture, you're in a very unique position to generate alpha, which is basically the return that you can generate from your investment beats all other investors. And the reason for that is the information asymmetry that exists in early stage investing is so stark, just because it's A, like private market, and B, there's so much ambiguity out there. So there's a really unique opportunity to see a gem or see something that other people can't see, invest in it, and then hopefully realize the returns that other people can't get, somewhere down the line. Again, this is all like in an ideal world. But yeah, that's kind of what drew me into VC investing. In terms of the current landscape, I'd say VC as an industry is pretty cyclical. Like you'll have periods of high activity followed by lull periods, as with like most industries out there. I'd say right now we are in a pretty active period. If you follow LinkedIn or if you just go across the news, you'll see that there are a lot of investment announcements being made. I think part of that can be explained by the fact that a lot of funds sort of raised new capital in the last couple of years. So there's a lot of dry powder to deploy. There is only like a fixed time period that they can deploy it in. So people are looking to make investments. I think right now, like sitting in mid-November, we got Christmas in a couple of weeks. So there's almost that artificial deadline that everyone's sort of trying to get push their work out before the end of the year. I think one word of caution of using an investment announcement as the measure of investment activity is announcements. There'll typically be a lag between when an investment is made and when the announcement happens, and that can be for a bunch of different reasons. Number one, like the amount of work that goes into PR can be quite extensive and rigorous. Number two, just like business priorities, like when founders get investment, their first priority is usually to build, and that is kind of their core focus. So there can sort of be a lag between when an investment is made and when an announcement happens. Also, not every investment will actually have an announcement. Sometimes it just doesn't make commercial sense to do one. But I do think it can act as a reasonable proxy for the activity that's happening within ANZ.
Yeah, great. Awesome. And sort of picking your brains in terms of Folklore Ventures specifically, what do you look for when investing in an idea? What needs to be there?
Yeah, it's a really good question. So we do invest pretty early. We have a broad framework that we like to do with any sort of investment that we make. The reason for that is it allows for a pretty robust investment decision-making process, but it still gives us the flexibility to invest across a lot of different stages and a lot of different sectors. I would say at the pre-seed stage, or when you are sort of at that idea or ideation stage, the key things that matter, or the key things that we anchor to, are going to be the market and the team. Reason for that is the product, the go-to-market, the pricing, the positioning, all of that will actually evolve and is oftentimes dictated by the team and the market. So we pay a lot of attention and we do a lot of work in trying to unpick and understand what those two components look like. So sort of breaking that down a little bit further, like what does it mean to be in a good market? The reason it's so important is because this dictates a lot of how you're going to build a business. It'll dictate what the product looks like. It'll dictate how you sell to customers. It'll dictate who the customers are. And it kind of dictates how you position yourself against your competitors. So I think it's quite important at that early stage, or when you are at that ideation stage, to think quite deeply about the market that you want to play in. And essentially, we're just trying to answer a couple of different questions. So firstly, size, like how big is this market? How many potential customers are there, and are they valuable? Like if you've got a lot of different customers, but they're not really going to be paying a lot of money for your product, then regardless of your customer acquisition, you might not necessarily get to a point where you can get to substantial revenue. So it's quite important for the customers that you're going for them to actually be valuable and have this sort of willingness to pay. The second thing is sort of growth or just trends within the market. And that's basically just, is this market growing or is it shrinking? And regardless of which way, what's a catalyst for that? So really the question that we're trying to answer there is why now? Like if we've got a big market, why should we invest now? Why is this company best placed to kind of capitalize on that opportunity? Oftentimes that will break down into either a regulatory shift, or it could be like a technological advancement that basically means that what used to be impossible is now possible. And when you sort of have that dislocation, that's really where a lot of companies can thrive. So we've spent a lot of time understanding the why now, or the trends within the market. And I think what's also really important is there a well-defined problem? And this is something that we've seen a lot with early stage founders or early stage businesses, is sometimes you might build a solution and then look for the problem later. I think it's quite important to be problem oriented with this. So is there a burning problem within this market that customers are just dying to solve? Because that can be used as a proxy for a lot of different things. It's basically asking the question of, is this a valuable problem to solve? Would people pay to solve this? And that will sort of dictate a lot of things in terms of how you build your product or how you kind of go to market with that. And then lastly, sort of the competitors. So who's playing in this market? What are the dynamics in it? Is it a fragmented market where you have a lot of different competitors, or is it dominated by a handful of incumbents? I think it's quite important to understand the nuance there. And how will you sort of position your startup or your business to be different to them, like offer a better solution to your customers? So that's sort of the market. And then in terms of the team, obviously this matters. These are going to be the ones that actually execute on the opportunity that the market presents. I think there's a lot of different ways to characterize a great founder, but essentially what's really important at that ideation stage, or at that very, very early stage, is just asking the question, what makes this team uniquely placed to win in this market? And so this isn't just going to be reliant on past credentials, although like it is important to have that sort of expertise in building a product or having a specific, network can be very, very helpful. But it's more about, do you have an intimate understanding of the market, the problems that the market has, and the customers? I think that those three things are very, very important to just not only be aware of, but just understand to a pretty deep level.
Yeah, amazing, awesome. And just following on from what you said, so in terms of the market and then the team, first of all, for the market, you mentioned it's really important to know the problem is solvable and there's an actual problem there. What are some ways founders can actually look to validate their problem and validate their solution without, any revenue or even if they're pre-product as well?
Yeah, great question. I think it's always best practice when you are building a startup to seek this validation as you sort of build the product, because what you don't want to do is sort of deviate from the actual problem that you're trying to solve and build a product that no one really wants or no one really wants to pay for. So getting this sort of early validation on your business idea or the product that you're trying to build is always a good idea. And the way you can do that is just, go out and talk to people, whether that be in your internal network, like your friends and family, or people in the industry, so like the market that you're trying to solve. Just like have a discovery session. It could be a 30-minute, 1-hour call. Basically just ask them, like, what does your day-to-day look like? What are the jobs to be done for your particular role? What are the pain points that you sort of have? And as you sort of keep building up more and more insights and more conversations, you're able to sort of draw out particular trends or observations from those conversations. And that's a really effective way to validate the problem that you're trying to solve. So if you sort of have 30 or so different conversations, and you might find that everyone has a problem with this particular thing that they do, and your product actually effectively solves that problem, that's a big green tick for us, or for the founder as well.
Yeah, awesome. And then in terms of the team, how does Folklore look at first-time founders or solo founders, and how much does that affect the decision when coming to investing in them?
Yeah, great question. So we've invested in a lot of first-time founders. I'd say there's sort of two questions there. Number one is sort of first time versus like previous experience, and then the other question is solo versus like a team. To answer the first question around being a first time founder, I think yes, having experience in the startup environment is always going to be valuable. I do think there's pros and cons to both, because if you had if you had founded a startup before, you might have certain biases or tendencies to build the product the same way that you did in your old startup, which might not necessarily be the best way to do it for your current one. So I do think that it's not how should I don't even know how I'm trying to say this, but it's not like it's a perfect solution if you have like a lot of startup experience prior to building this current business. I think there's pros and cons to both. Like obviously experience matters, but I think the type of experience or the quality of experience matters more. On your second question of solo versus like a team, I think the bigger question will be how will you, like, I think it's completely fine to be a solo founder, and we've invested in solo founders before. I think the bigger question will be how are you thinking about resource allocation going forward? Like, how are you going to build a product? How are you going to sell to customers? How are you going to do all the ops and the admin side of things as one solo founder? I think that's a bigger question. In the early days, like you'll probably have to wear many hats and it can be quite chaotic. So I think it's important to start thinking, 6, 12 months ahead on, do I hire another co-founder? They can take care of the technical side of things. I'm going to focus on the commercial side of things. I think that's a better lens to think through it with.
Yeah, awesome. Thanks for clarifying that as well. So we touched a bit on validating the problem and validating your solution. In terms of how founders can show a bit of traction for their idea, what does Folklore look for in terms of that area? Whether it be strategic partnerships or having that validation feedback as a bit of traction as well. Maybe expressions of interest or something along those lines. Is that something you look for, and is that important to Folklore?
Yeah, absolutely. I'd say the big question that we're trying to ask at that early stage is there demand for this product, or is there demand for this business? And having a bunch of different data points that point to a particular direction is always going to be helpful. So in absence of revenue, which is like a very straightforward way of saying that, yes, a customer wants my product, and yes, a customer will pay for my product. In absence of that, there are still a lot of different ways that you can demonstrate traction, or you can demonstrate that there is demand for your product. One might be through expressions of interest. So if you've kind of got a prototype or a product that's relatively progressed, you can start advertising it, and basically just get a gauge of, would people pay for this? Would people want to use it? So expression of interest is a great way. Even engagement on social media. Like, I think what we've seen a lot of is people building their product publicly. So if you're able to sort of say, oh, like we just launched a new landing page, or we've just launched version 1.1, if you can sort of track the engagement that you're getting, that's a great way to it's a great proxy to use for how much people want to use your product or how much people want to pay for it. Strategic partnerships, great example that you sort of mentioned. These are all just like different data points to validate that what you're building is like valuable to people. I'd say we don't typically anchor on one specific data point. Like, what's more important for us is to have a range of different data points that we can sort of triangulate together. So the more, the better, basically.
Awesome. And in terms of the investment process, I understand that once a pitch deck is submitted, you'll have a first founder meeting. In terms of founder personality, what are you looking for? Maybe what are some characteristics that you've seen that make founders really investable?
Yeah. I'd say that probably breaks down into two, like the softer traits and then more technical abilities. I'd say for the softer traits, the number one thing is sort of internal motivation. And that's essentially just how passionate are they about solving this problem. And I think the best founders that we've sort of come across are just obsessed with the customer, obsessed with solving this problem and finding a unique way to do it and winning in this market. We actually have in our sort of scorecard system the phrase, we want missionaries, not mercenaries. So that's something that's front of mind for us as like a venture fund when we are looking at founders. Um, and it also kind of speaks to the resilience, right? Like building a startup or building a business can be very, very tough. And I have a tremendous amount of respect for those that do. So if you're truly passionate about your cause or passionate about solving this problem, and you can afford to be scrappy about it, I think that goes a really long way in terms of making that impression to investors. I think another trait that's really, really important for founders is self-awareness, or maybe transparency and their coachability. I think as a founder, you're not necessarily going to have all of the answers. Like as a VC, we're not necessarily going to have all the answers either. But I think at that early stage where there is so much ambiguity, it's really important to know what you don't know and then seek help where you need it. So those are kind of like the two, I guess, really core soft traits that we look for. In terms of technical ability, I think the obvious one that we sort of mentioned before is just a deep understanding of the customer and the market. You would hear a lot of VCs say that they want a founder that has a unique insight. What that basically means is either through observation, through living like with the problem, or just doing an immense amount of research into the market or the problem space, they've been able to come up with a unique, or I'm just using the word as part of the definition, but they've kind of come up with an observation or an angle where they can solve this problem in a way that other people haven't really caught on to yet. So I think, yeah, the deep understanding or intimate knowledge is very important. And then secondly, and I think this is actually quite an underrated skill, is just your ability to sell. And that doesn't just go to, selling to customers, but it goes to how do you sell to investors? How do you sell to talent? So if you just think about the idea of you as a startup, you're trying to ask like an engineer to leave their full-time stable job to come work for your early stage business, which has a lot of uncertainty. You really do need to be able to sell your vision or sell the business that you're trying to build in order to attract talent. So I think that is a skill that is very difficult, but very, very powerful.
Yeah, awesome. Thanks. So much insight there. It's great for our founders to hear that as well. So just looking at the chat as well, in terms of the pitch deck, what do you think is important to include in that first pitch deck when you're sending it out to VCs and investors?
Yeah, I think there's a heap of resources online on how to construct the best pitch deck, and there's a bunch of templates out there. So those are super, super helpful, and I know Hyper do a great job of facilitating this process as well. I'd say my main advice, particularly for early stage businesses, is to keep it tailored towards your business. A lot of the templates out there, for example, will have a slide on traction or financials, where they'll include the income statement. If you're an early stage business and you don't have revenue, like that just doesn't make sense. So I think that's obviously quite a trivial example, but I think it goes a bit deeper. Goes a bit deeper than that. So keep your pitch deck tailored to your business. I think the clarity of thought becomes really, really important, particularly for deep tech businesses or businesses that are solving quite a complex problem in a complex way. The ability to effectively communicate what your business does, what problem it's trying to solve, I think that's quite an underrated skill and something that's very highly regarded from like a VC perspective. And in terms of, I guess, key elements to include, like as a very like preliminary structure, I think things that are almost like non-negotiable that you want to include in a pitch deck. Number one, like a well-defined problem and how you're thinking of solving it. Like number two, the market, like who are you thinking of selling your business to? Like who are your sort of target customers? How big is it? Number three, the why now. Like this is kind of what we spoke about at the start of the session, but what makes now such an exciting time to build a business in this space? The business model is pretty important to include. Again, a lot of this stuff will be early days and will probably be refined or evolve over time. But I think if you're able to articulate how you're thinking about building the business, it goes a long way. I think the competition is going to be very, very important. I think one of the traps that some founders might go into is to say that they don't have any competitors. I think avoid doing that. It can come off a little bit naive, especially because if you're operating in a big market, chances are there's going to be other people that are going to be building here. So what's a better strategy is to actually say, yes, as competitors, but this is why we're 10 times better than them. So there's a lot of different ways you can do that. It could just be a simple table that basically talks through, here are the competitors, here's how they go about selling to their customers or their solution, and here's how we're going to differentiate ourselves. And the team, this is obviously going to be very important. I would avoid just putting the logos of where you used to work, although that can be helpful. I think what's more effective is to have commentary or in some way communicate why you as a team will be best placed to win in this market. And then lastly, the fundraise. So if you're raising like capital, how much are you raising? What are the sort of indicative terms that you're thinking about? So that could be the valuation. If you're going to be doing it as a safe note, what are the terms of the safe note? I think as much detail as you can kind of include there, the better. And then just like note that it's going to be indicative. Like a lot of this stuff can be kind of worked through as like an open dialogue. But I think those are kind of the, at least from my experience, the key things that we kind of look at when we review pitch decks.
Yeah, fantastic. We're just wary of time. Unfortunately, we've run out. This session's gone so quickly. But for those questions that weren't answered in the chat, I'll be sure to sit down with Sachin and get those answered for you at a later time. But yeah, thank you so much for joining, everyone, and especially our guest Sachin. It was great hearing all those insights from you, and I'm sure everyone got, some great actual insights to go on and build their startup with.
Don't know about that, but thank you very much for having me. It's been a pleasure, and yeah, hopefully there was some semblance of an insight there.
Yeah. And for anyone who'd like to get a free startup assessment from our team at Hyper, you can do so on the Apollo platform, and you can get you just click the free idea evaluation tab on the side. And then Sachin, if founders want to reach out to you, what's the best way to do so?
Yeah, best way is probably LinkedIn, probably the most responsive. Otherwise, my email is just sachin@folklore.vc.
Yeah, great. I'll just put that in the chat as well for people to contact you. But that concludes our interview today. Thank you so much for joining, everyone. And yeah, those questions will be answered, and the recording will go up on the Apollo website as well for you to reference back. So yeah, great seeing everyone, and have a great rest of your day.